Everybody, welcome to the class. Afsat, your hand is raised. What is the matter? Any question to ask or anything? All right. So you all are welcome once again to this class. So for a while now, yes, I've been having some interesting session, some exciting session, right? And the class is coming to an end shortly, isn't it? And all of you, you have seen our. Okay, so I want to commend you guys' effort, your resilience towards learning. Omobolamo, please mute your mic and also help us to turn off your video. Omobolamo, please help us to turn off your video and also mute your mic. Okay, I want to say a big thank you, and also to commend you all efforts towards the learning so far. Yeah, some of you have showed great enthusiasm towards your assignments and everything. That is quite commendable. Yes, so keep it up, right? And like I said, in September, right, we'll be launching our e-learning platform, right? Free one. Okay, so that our platform, can go there to watch data analytics using Excel and also PowerPoint. So our instructor, they are tier one instructors who have designed the course. So now imagine that in our free training, right? Like this one, for instance, now, so you all are getting all these values, right? So now imagine that you enroll for any of our paid classes, So just imagine how it will look like, right? So, like I said, our upcoming masterclass, which is Demi School of Finance and Investment Management. So the My School of Finance and Investment Management, right? So where you will learn the core and fundamentals of finance, where you will learn core everything about finance, right? So it's approaching, okay, is what is fast approaching, you know. Okay, give me 1 minute. Okay, so can you all see my screen? Hello, can you all see my screen?
Yes, sir, we can see it.
Oh, makes sense. So can you all see it? Okay, so this is our School of Finance and Investment Management, right? So here are the things that we learn. Data analysis, PowerPoint, advanced macro, financial modeling, private equity, valuation, and also about stock market as well. And also we have 2 month project, 2 month internship. We have project, we have certificate, and also job positioning. It's 4 months. Now when you see this place, this early bed, it is 80K, right? But then there's now a good news for you. So that 80K has also been subsidized. It is now 50K now. Yes, for the first 20 people. 50K for the first 20 people, right? So, and right now we are currently about 12. Right now 12 people have paid 50K. Right now. So it remains just 8 people, and once we are 20, right? So this price will go back to 160K. Okay, so just see that you make anything you want to do, any of your decision, very fast. Okay, so that's that. So this is what we learn. This is what we learn in our school of finance and investment management. You have understanding of finance, of capital market, both in the US and also in Nigeria. So yesterday, I showed us a model which I built. Okay, yes, SQL. You know, this is a typical startup model. When I built this model, then this model was used to raise 100 million. You know, then, and this is what you also learn in our school of finance. And investment management. You can see everything. How it look. Okay, you can see, right? So you can see the objective of the model, to raise what? To raise investment funding, right? So it was used then to raise 100 million. So this is the scenario switch, right? Scenario. So when I change this to best case, you can see that has changed. When I change this one to what? To base case, has changed. And also we also have what? We have yeah, so balance sheet, all of that. So we have this evaluation, we have ratio. So this as well, this ratio, you won't learn it anywhere, right? So apart from our play, you can see the ratio, you can also change it, Our ratio have what? It has narrow switch. So if you want a career, in investment banking, a career in research, to work in private equity or venture capital or corporate finance, don't miss this thing. These are part, of what you have to learn, right? Okay, you can see as well another scenario, another scenario switch. You can see it, cost of sales. You want to examine your revenue, right? Compare it to what? To your EBITDA, and also compare it to your net income, net income, to see how it perform. So all of these things, right? You won't learn them anywhere, right? Apart from our place. So you will learn it in the course of the training, So if it confirms your interest, you can let me know. So the training is currently 50K, right? For the first 20 people. So right now we are about 12, what I've put in for it. So which implies that just 8 more people to go, right? Yes. So and the program will start in September ending. Do you understand? So just 8 more people to go, right? So don't sleep on it. Do you get? So once we are 20, then if you want to pay your money for the School of Finance and Investment Management, you are going to pay 160K. All right. So before I move on to today's class, does anybody have any question? Hello?
We are with you.
Yes. Okay, makes sense. So, do you have any question before I move on? Okay. All right. So, okay, Gochi, go on, go on. Go on with the question, Gochi. Go on with the question, please.
Okay, sir, please. My question is on this School of Finance. Please, I just want to know the deadline for payment and how
What
long
is
the
it?
class will take. So what I'm asking is the deadline for payment.
Deadline for payment, right?
If there is any deadline for payments
Definitely,
on the School of
there will
Finance.
be a deadline, but why I've not put a deadline is because,
Hello, sir.
yes, there's a deadline, right? But why
Hello,
I've
sir.
not, yeah, I can hear you. I can hear you. Somebody's talking. Somebody's talking. Okay. Ugochi, are you there?
Hello.
Are you there? Yeah, go on, go on.
Hello.
Yes, go on, go on, go on. Go on, I can hear you.
Okay, so I think she's asking when is the deadline for the payment and how long the School of Finance and Investment class will last.
Okay, so it is 4 months, it is what 4 months. You understand? So the deadline, because currently it is competitive because people have said, hey Mike, I want to put in, I want to come in. Like I said, as we are 12 now. So why we have not put a deadline to hit is because of my brother, who is a CFO, right? And also MD, of a multinational company. So it actually subsidize the money for 20 people. Do you understand? In fact, some of you probably that day, my status, you saw it over there, so he subsidized that money for people. So for 20 people, right? So and right now we are 12, or thereabouts. So once the remaining 8 people, made a payment, right? So then we are good to go. However, hopefully this month ending, or first week of September, right? So the border can be closed. So just see that you make every plans, as soon as possible, right? I don't know if that answer your question. Unfortunately, I don't know if that's answer our question right.
Yes, sir.
Okay. All right. So thank you. So do you have anybody else again before we teach towards today's class? Do you have anybody else again before we teach towards today's class? All right. So earlier today
Sorry.
I
No,
Hello.
okay. You want to talk?
please, what are the
Please,
requirements?
I would want to know. Okay.
What are the what?
What are the requirements?
Requirement is to have your laptop, have your internet connection, and have
Okay,
a sound mind. Then you have your money. Those are the
okay,
requirements.
Okay, please,
okay,
I
sir.
want to know what
Okay,
the certificate at the end of the course
100% now.
and what's the duration of the training?
4 months.
Okay.
Yeah, because you can't learn those things in this now 1 month. Now imagine this is what we have been doing now. This our training now. Going to a month now, right? This our training. So we are not done with it yet. So we can't learn all of those things in 1 month. Do you understand? Right.
And the
So I
certificate
think that
is
what is it?
acceptable. Like the certificate, I mean, maybe you want to apply for something relating to the
Globally,
courses.
globally. Right. So anybody else again before I shoot for this class?
Hello, sir.
Yes, Ola, Oladapo Toyin. Abi.
Can, can Lagos State government accept the certificate?
Who?
Can Lagos State government accept the certificate? Because I work with Lagos State government.
100%. And besides, right? Besides, at the end of the training, right? We are also going to see that you get a job with investment banking, with capital market space. Do you get where they will
Okay,
also pay you something meaningful? Do you
okay,
understand? Do you get it now?
okay, I get it. Okay, no problem.
Yes. All right. So, okay. So earlier today, I sent the videos, to the group chat, right? That is, all of you should go watch, before we commence the class. So now, how many of us now have watched the videos? How many of us now we are now on the same page?
Excuse me, sir.
Yes, please.
Some of us, this is our first time being here. So we just come across.
Upstart, right?
Yes, sir. I
Okay,
just
makes sense.
came
That's a
across
problem.
the link somewhere.
Yeah, what?
I just come across the link somewhere.
Okay, it's fine. It's fine. Don't worry.
Yeah, so this
So
is our first time. We don't know how to.
just relax your mind, okay? Relax, So I will
Okay.
just send me a DM. Yeah. So after the class, right, send me a DM. You get.
Okay.
Yeah, thank you. Okay, so you can see that building model is not hard, it's simple, right? So
Hello.
now, okay, Badmos, want to talk?
Yes, the video, the YouTube video. I don't know what. I don't know if anybody has the same experience. It's not that
If what?
the video is not that sharp.
Are you serious?
Yes, one could hardly see the figures, the numbers, except if you were in class, you can flow. But if you were not in class, you may have some issues coping with the videos on YouTube. I've watched the last one yesterday, and I watched the one we did last week. They weren't
Okay.
they were not good enough. If you were not in class, you may not find it interesting, kind of. Do you get?
Really?
Yes, I'm
Oh,
now
sorry about
doing.
that.
The video
Sorry,
is
please.
clear. Just go to settings
Change the
and change the
quality.
quality.
See, excuse me, good evening. I've gone to settings and I've changed my settings, and I can still attest to what that guy is saying. The video is still not clear.
If you were not in class,
Exactly,
you
the
can.
video is not clear.
What is it?
Yeah, hello?
Yeah, I can play. I can hear you.
Yeah, just go to YouTube settings.
Okay.
I've changed that too. It's still the same thing.
Click on quality 720p.
I've changed that too. I changed to 720p. Still the same thing. It's
Really?
still showing blurry.
Exactly. It looks kind of blurry, kind of.
Okay.
Same thing.
Then want to talk? Then am I there? Want to talk?
Really, I wanted them to just change the quality, but since you said it's still the same thing, I don't know.
Okay, for your own too, is it like that?
No, I actually changed the quality and it was fine.
Okay, so I think that should not be individual appliances. Now, maybe your laptop or your phone, So I think that should be the challenge.
Okay.
Gifts, do you hear that?
Okay.
Yeah. So gifts, do you use a laptop or your phone?
I use my phone.
Okay, so what if you tried use this thing before your laptop? What about that?
I'll try with my laptop.
Okay, Badmos, what about you? What do you use? Phone or laptop?
Yes. I'll try with the laptop.
Okay, so try it, then give me feedback, please.
Okay.
You can see that. You can see how then you can now mitigate that, because in as much as it is free, you see, so you all have to get value from it. So anyway, sorry about that. Okay, so let's continue, right? So now, right now, how many of us now can how many of us, right now can now say, okay, to some extent, I can forecast income statements. How many of you? How many of you, right now, to some extent, can forecast an income statement? Okay, gifts. Okay, Frank. Okay, easy. Okay, so gift. Before you join this training, can you forecast income statement before?
No, I don't even know what's it called? It's called
what?
I didn't know about all of this initially.
Oh,
but now
really?
at least to an extent I can.
Wow, makes sense. What about Hazy? What about you, Hazy?
I didn't have an idea, but now I can.
I don't hear you that. I don't get that. You don't what?
I said I didn't know how to forecast before, but now I can.
Okay,
Yes, before now I do.
Oh, hallelujah. Okay, so who else again? Anybody else? Badmus want to talk?
Not at all. No.
Okay, anybody else? Zainab, anybody else? Titus, anybody else again? All right, so that shows that we are learning. So now, how many of us now we are on the same page, to where I stopped yesterday? How many of us? Okay, Gochi. Okay, is it? So today, let's continue. Right. So, Cadbury. All right. So this is where we are. Right. Let me try to again to expand. Yeah, can you see it, please? Is it clear?
Better.
Hello.
Okay.
Yes, it is.
Yeah.
Yes, sir, it's clear.
Okay.
Yeah,
Okay.
it
So
is.
that again, we not have any issues. We have time. So, this is where we were or where we are, yesterday. And see how I have to restructure the balance sheet. So now I want to move on to our input. Right now, don't forget that. Yeah, I mean, I've so all of you all know how we do everything here, and also how I get everything in this place, right? So I sent you guys a sheet, about backend. So I name it backend, right? And also send us one cash flow format as well. Okay, so now in this place right now, so I think I will have to pause this one here, then talk about this one maybe tomorrow if we have a class tomorrow, or next week, either one. Okay, so and for our current assets, right? Like I said, we have two types of assets. We have current assets and we have non-current assets. So for our non-current asset, what do we have? We have property, plant, and equipment. We have right of assets. We also have we also have intangible asset, right? Don't forget that. So now, under our current asset, right? Don't forget that we have collapsed. So we, yesterday, our current asset. Where are you? 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 So this is what our current what? This is our current asset. Like I said, that like I said yesterday that what matters in your current asset is your inventory, your trade, your cash and cash equivalent. Are what matters in your current asset, right? So these three, goes a long way in your current assets, right? So goes a long way in what your current asset, right? So why other asset, we have now compressed everything like right of asset, intangible asset, prepayment, all of that. So we put them together and call them what current asset, right? Then what matters is what is your inventory, right, trade, and your cash. And if you want to forecast, okay, you don't forecast your cash. Cash is do that, right? So your cash and equivalent what flow your statement, right? So now let's go to our input. So now we have cash, leave cash alone, and we have other assets. So now in this place, right, it implies that since we have other receivables in our balance sheet, what do? We do what related, right? Okay. So and also we don't have this as well with it, right? And also we have asset held for sale as well. We delete it, right? Meaning that everything has been collapsed into other assets, right? So and now your cost of sales, to get the answer for your cost of sales, is going to be the percentage of your to get the answer for your inventory is going to be percentage of your let me expand this place more. Yeah, so it's going to be percentage of your cost of sales. That is, want to get the answer, I mean the percent, to know how that's grow, right? To get this, it is going to be percent of your cost of this. So then what do we do? Say equals to, then go to your inventory, in your balance sheet, right? This is our inventory, and divide by your P&L. By what? By your cost of sales, right? Then press enter. So convert it to what percentage here? Okay, then you drag, right? Makes sense. So now for our trade what receivables, you can see here saying what percent of what of revenue. So equals to, go to your balance sheet as well. Okay, use it here, then divide it by what? Go to your P&L revenue. Okay, right? So here again, convert it to what percentage. Then you do what? You drag. So then this one is say ending balance, then equals to, come and bring it here, sorry, the balance sheet, ending balance, leave it, then do what? You drag it. So you can give it what? A common style, common style, right? So now in this place now, in our 23 going forward, so what do you think we can use? What percentage do you think we can make use of? Anybody? Hello? Hello? Hello, can you hear me?
Yes, sir, we are with you.
So what percentage can we use, going forward now? Seeing that our historical, 2021 showing what 23%, 2022 showing what 25%. So now for 2023, right? So what do you think, we can make use of our assumption?
27%.
Pardon?
27%.
Really? Why? Let's see the average first. Let's see the average. So what to give it to us? So average give us what 24%. Okay. So what do you think we can use? 27, right? Or 20? Anybody now? Let's talk now, please. What can we use? Yeah, Kenneth.
Hello, sir. Can you hear me?
Yeah, I can hear you.
Please, this assumption, this percentage, is it based on assumption? I don't even understand. I'm new in the class.
What is it?
The percentage you are using, is it based on assumption?
Okay, so
I'm confused. I don't understand how I can get. No, I'm just new. This is my first time being in the class.
What is it? Your first time?
This is my first time of being in the class. Yeah.
Okay. All right. So don't worry. So I will send you the recordings of the previous classes. Is that fine?
Okay.
Yeah. So now, right? Okay. Somebody is talking. So she said that we should use what 27%, Abby? 27%. Okay. So for trade what receivables, what should we use? We have 10, we have 9 here. So should we maintain 9? Should we maintain 9%?
Yes.
Okay, 9%, right. So this one is just the ending balance, that's the ending balance. So they cannot drag it. You understand? But drag it. Now this 27% does not mean that the company will be using 27% all through, right? So you can change it, you can change it. You can say, okay, so 20 what, 25, you can put it to 20, 30, so depending on you, right? But one thing is, the more you build model, the more you understand the efficacy. You understand? So the more you build model, the more you understand what the efficacy, right? So it's all about constant doing, constant practicing. So please just say that you are doing something. And for this one, it's simple. So okay, now we have share capital under our equity, right? We have share capital, we have share premium. So let's go and check what we have in our own here. Um, yeah, share capital, share premium. So we have other reserves, we have share based payment, right? So let's just go and bring it. So let me. So let's say, let me bring other reserves. Yeah. So your retained earnings, that one takes special treatment. Okay. So now this one has been saying what? Saying that ending what? Ending balance. Okay. So because you are not in a company, then you can't know what they want to do. However, there are ways to also forecast all this one, right? But then those one, they are kind of not necessary for this class, really. But then if you use any balance, to forecast this thing, yes, you are correct. You are absolutely correct. Okay, so there's no problem. So let us go and bring our ending balance. So this is ending balance, yeah. Then share premium, then other reserved, then last one. So then you do what? You drag it, you drag it, right? So I can now say equals to, just use the ending balance. So drag it down, then drag it further, drag it down, then drag it further. Right. Okay, so where is going? Is going. So now for our dividend payout. Okay, so how do we solve our dividend, to know how much dividend that was declared? Very simple, the dividend, right? So now company pay dividends once they make profit, okay? And to get that solved, right? I'm coming in. So solved, right? Say equals to, it is your dividend declared, divided by your net profit. So dividend is always in your cash flow statement. So go to your cash flow statement, yeah, raw data, and go and look for it there. You will see it. Okay. You will see it here. Where is it? Where is it? Where is it? Yeah, you can see it. Right, dividend page. Can you see it? Then this is it here. Then divide it by what? By your net profit. By your net profit. Net profit or part, or net income. Either ways. Net profit. So this is it here, yeah, right. So then you drag it. Then, okay, so it means that this company, the payout ratio in 2021, it was how much? 35%, while in 2020, what? 22, it was 10%. So what do you think they will also pay out, as dividend in the, what do you think should be your be our forecast, right? Our assumption. Anybody will just think, can decide to use 25%, anything you want to use. Let's just maintain, let's just say 25%, let's just say. Then you do what? Drag it further. Hello, are we together?
Yeah.
Okay, so now for our non-current what? Liabilities, right? So okay. Now this one as well, leave it alone, right? But don't forget that we do not have the VAT taxation and also employee what benefit and also leaves. So can just delete this one, yeah, because we don't have it in our home, you know. But everything there has been collapsed into other liabilities. So just delete everything, you know, delete it. So we now have only what? Only current what liabilities. But leave it alone like this. So tomorrow we will tackle it tomorrow. Tomorrow or next tomorrow, either one. Sorry, tomorrow or next week, either one. So now our what? Current what liabilities. Recall that as well. We don't have current what liabilities, right? Sorry, current tax liabilities. We don't have it. You know, can also delete it, right? So now we have trade what payables. We have what other liabilities. Okay, let me put everything here in percentage so that I'll not be. Okay, so now also your trade payables is also equals to percentage of what? Trade payables, trade payables. You can see it here. Percent of cost of sales, you know. So go to your balance sheet under what your current asset liabilities. So this is here. Then divided by what? By your cost of sales. P and L, where are you? Okay, then you okay. Also, other liabilities, you know, the percent of what of revenue, um, revenue, right? They can now do what? You know, drag it. So now, what should we? In fact, this one can easily use what 4%, you know, going forward, right? For this one. So this one, what should we use in this place? Anybody? Anybody? Should we keep it at for drag it forward? Okay, great. So now we are done with this assumption here. Okay, so what we are left with now is now as well. Leave it alone. Yeah, leave this one as alone. Okay, so this will come later. Yeah. Now that want to now let me freeze this place. Let me freeze it. Okay. So right, let's come to this side. Okay. Now in this side, I'm coming in, trying to see what can make everything easy for us. Now, these are what revenue, these are what cost of sales, our PBT, and our what profit for the year, right? So now, this one, right, talking about our forecast, okay? So now what we do is, this part is what is where we need, this part here, okay? Let me give it a border, give it a border. Then you can just give it one background stuff, you know. and give it something light. Okay, so now our revenue, go and bring your revenue. Okay, your forecasted revenue, go and bring it. This is it here. Okay, let me also give it a star. So also go and bring your what cost of sales. Forecasted what cost of sales, go and bring it forecasted. Also go and bring your forecasted PBT, where you this is here, right? 15. Also go and bring your forecasted what PAT, this is here. So then you do what? You drag it. Okay. All right. So now our inventories. Our inventory, is what? Okay, so now come to this side. And let me give it just one gap here. And so equals to come to your inputs. So these are what current assets. Okay, give it loading it. So we have inventory. Link it. We have trade. We have other what receivables. That's it. So then this one, delete it. Okay, so of course, here, right, what I did is I link this our go to the input, right? This our current asset, I bring it here, and also everything under it, and see, I bring it further, forward. This as well, so, and also this as well. Okay, and here as well, we have what, right? Percentage, isn't it? Can just drag it down, right? Okay, so now our inventory, right? Our forecast now, our forecast. So everything in this place, will be your forecast. Let me even also put everything here as well into, percentage. So then also, let me. So also your forecast. This is here, forecast, right? Also this place as well. Also this place as well. So okay, here should be percent accounting. So then you do what? Drag it. Okay. So hello, any question? Any question? Any question? Any question? Please ask.
Okay, sir. My question is, why is the forecast always on constant figure?
What is what?
The forecast side of the equation, why is it always on constant figure? How about some implications that can change it, like
The what?
some economic? Can you hear me?
And I hear you now.
Okay. My question is, why is the forecast side of the evaluation always on constant figure? Like if you have 2%, the next year 2%, and so on. how about some factors that can affect, some economic factors that can affect the running of the business or the company? So, Kemi, hello?
I can hear you.
Okay. In a situation, my question, in a situation where there is economic crisis, won't it affect the forecast? So why is the forecast on constant figure?
Okay,
Like the
yes.
percentage
So
doesn't change.
okay, thank you, right? That's a very, very good question. So that forecast, you can change it to, you understand? So it must not be constant, right? But one thing is, if you are building a model, now the first step is don't rely or don't seek accuracy. You understand? So just see that at least you do something first. Then once you're not done with a model, right? You can now try to adjust them one by one, one by one. Do you understand? But for now, just see that at least you put some figures, for now. Do you get it? You put
Okay.
some what?
Yeah. Yeah.
Some yes, some figures, for now. I don't know if you get that right.
Yeah. Yeah. Yeah.
Hello? Hello?
Gravity, sir.
Yes, so I don't know if you get that.
Yes, sir. Yes, sir.
Yes.
We do. We'll watch the video again for more clarification, but we do.
Okay, so let me also increase this one. So is it clear now? So can you see this thing better?
Yes.
All right, great. So please, if you have any question, just unmute yourself, then you ask. Okay.
Mister.
All right. Yes, go on.
Hello, sir.
Yes, please. Shoot.
Sorry, is this P&L wearing?
Is it what?
I need to confirm because P&L, profit and loss.
Oh no, my dear. We want to forecast our balance sheet. So we have done our P&L before now. You understand? Nafisat, are you the one that asked the question?
Sir.
So
Yes, sir.
Okay, so we have done our balance sheet. Before now. You understand? So I'm sorry, we have done our P&L before now. So what we want to do now? We want to do our balance sheet, right? And also our cash flow. Then to now see if our model is balanced or it's not imbalanced. You understand? So we have done our
Yes, I was so confused.
Yeah?
Sorry. I was so confused when I saw P&L as the document name. I don't know.
Hey. Okay.
As the sheet name, sheets for the sheet. We are working on worksheet. We are working on.
Okay. Okay, so let's continue. So the sheet we have is calculation. No. So now, okay, so this is our current asset, right? Then also go and also link your what's it called now, your current liabilities, the way we do for this one as well. Current liabilities, so can also we have what again? Also link what? Also bring your trade and payables. Also bring what again? Bring your other liabilities. Then this one can now delete this one. So we don't have them. So here as well, what we have this as well. Also impute. Yeah.
So sorry, I have a
Yes,
question,
go on,
please.
go on.
Yes, when we did other assets, we made use of ending balance.
About what?
But now, when we did other assets,
Yeah.
we made use of ending balance.
Okay. Other
So
assets.
now, yes, now other liabilities we're now saying is a percentage of revenue.
Hey, are you
So
sure?
this is other liabilities. The other asset we did ending balance, which is the
Oh, I'm
2022
coming.
balance we had.
I'm coming. Let me check. Okay, so other assets. Let me go and check it. Other asset. Okay. Other assets should not give one coming. Other assets. Okay, we have ending balance. Ending balance. Okay, other assets should give us should also be percent of our revenue. Okay. Yeah. Thank you, thank you, thank you, thank you, thank you. Then that will be percent of what? Percent of percent, right? So then that will now be equals to what? Equals to balance sheet. Where is other assets? Thank you for that, brother. You know. So this is here. Then divided by what? By your P and L, your revenue. You know. So then also put it here. Then also percentage. 2%. So you can just maintain that 2% going forward. You understand? Right. So makes sense, right? So now let's now continue calculation, right? Yeah. So let's also link it. Payables. Where are we? Where are we? Where are we? Payables. So our forecast, bring it here as well, and also right. Then you do what? You drag it. Okay. So now you want to now go to calculation again. So here as well, now I want to multiply it, come in, let me try to start from this place. Okay. So also we have inventory first. Now go to your we have what inventory first, right? Then here we have what next? We have trade receivables, right? Here as well we have what? So now I want to forecast this now. You understand? So we don't have these two, and just delete them. Okay, and also our current asset, for the current liabilities. My screen is sorry. Can you see it? Yeah.
Yes, thank you.
Okay.
Yes,
Okay.
yes,
Thank
yes,
you.
yes, 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 yes.
Okay. I have to be in ballers by now to be watching ball. Anyhow, still gonna watch ball, sha. So yeah. So now I want to let me also copy this one again. So this thing, right? I think I've taught us how to use formatting, alt ES, right? I've taught us, about that. That's one thing about being a modeler. You understand some shortcut in Excel very, very well, right? Now look as though you're doing magic. Okay, so now not the forecast, right? So now our inventory is what? Equals to, then go to your inventory. So this is your inventory, right? You can see inventory. So now what now happen is you will times it by what? By your cost of sales. Okay? By your cost of what? Sales. Okay? Times cost of what? Of sales. Right. And also trade what? Receivables, right? Equals to where are you? Yeah, right? This isn't it? So times what? Revenue, right? So times your revenue. Okay, and other assets. Okay. This right times what? This is 0 times your revenue as well. Okay, so this should be in percentage, Okay, so then you do what? You drag it. Right? So now this place here as well, you need them this place. So the last term historical. Yes, you need it. Then go and bring it. Inventories, your balance sheet, 20 what, 21. 20 what, 22 rather. So inventory is what? Is it? What's it called again? The receivables is this. Then other asset is what? Where are you? Other assets. Other assets. Right? Okay, so now then equals to sum together. Let us put in it. Now we have what? We have 18,194,913. Come back to this your balance sheet. And as well, sum it if you get the same answer. Inventory, plus trade, plus other assets. Are they the same? 18,194,913. Check it again. If you're on the right path. 18,914,913, correct. Then come back to this place and delete it. Otherwise, life will be difficult for you. Then not drag it. Right? So now your trade what? Receivables has okay, let me also copy this place. This place. Why did you show me name? I should not be showing me this name. Okay. So now your what? Then payables. Go and bring it. Balance sheet. Then other what? Liabilities. Then sum together. So you dragged as well. But then you go and check again if 22550, go and again check again. So this plus this. Yeah, correct. So then go back to your calculation. Hello, are we together, please?
Yes.
Okay. So I'm coming now. So this thing, you don't have to at all cram it. But once you have been doing it, all the time, like I said, this is what I do regularly. This is what I fetch millions of naira. You understand? So you don't have to cram it. So just see that you are consistent, practicing, right? So okay, so now our trade, right? Payables. Let's go up. We want to as well forecast that one as well. Trade payables. Where are you? Yeah. And what times our what? Cost of what? Cost of sales. Go and bring it. Cost of sales. Yeah, here it is. Here we go. Right? And also our other what liabilities. Here it is, right? Then revenue, right? Okay, so then do what? You drag. Right. So now your operating working capital, is now equals to total assets, minus total current assets minus what? Minus total current what? Assets. Right? Then you do what? You drag. So, and your changes in the working capital, is this, minus what? This. Right? Then, okay, this one should also be, then you drag. Should I teach you valuation? Should I teach you valuation? Should I teach you valuation? Hello? Are we there?
Yes.
Should I
Yes, we are.
Should I teach you valuation? Should I teach you valuation? Okay.
Please do.
Teach us now,
Thank
Mr.
you.
Mikey.
I'm thinking about
Teach
it
us
though.
now.
Should I? All right. So now, what we now do now, right? Okay. So everything now
Mr. Mikey, the
everything now.
operating working capital,
Yeah.
the OWC. Can you do a recap, please? I think I lost my
Okay.
time.
OWC, yes, means operating working capital, right? It is equals to your total current asset. Sorry. Yes, your total current assets minus your total current liabilities.
Okay.
Now, this standard that I've taught you, in as much as this training is free, if you go and do FMI, right, this is how they will teach you. This is the standard. See, if you go to UK, this is how they will follow it. You understand? So this is the standard ways, right? And one thing that I can assure you, right, you can't do your model like this and your model not to be balanced. Never. Okay, so anyway, enough of that. So what else, Michael?
The
So now,
17, the
what?
changes,
The
the
changes, right?
mm,
So because to your previous minus your current, then you drag it. So
okay.
yeah. Now we have what? We have our PPE left, our retained earnings left, and we have our borrowings left. You understand? So lease should not be there because we do not have lease already. Let me delete them this for us. Yeah. So okay. Right? Yeah. So what else? Michael? What else am I looking for? Okay, so I want to now link now. So now come to your balance sheet, right? Our sheet, right? Where are you? Where are you? Yeah. So now I want to leave now. So inventory brings right, but your retained earnings is what you need in this. Right? This one, do it tomorrow or next week. Okay, so then you also drag it. So you have your loans, leave it for next class. And our trade payables, where are you? Where are you? Payables. Yeah. Then take us to what? Again. This out. So then you do what? You drag. So if now you do some form, I did forward. So that it is false, right? So it's false for now. Let's just go to the false here. So for now it is false. So this figure you are seeing here, this figure you are seeing, this is what is missing. This is what is missing. You understand? Okay, right? So for now it is false. You can see that it's false for now, right? So until when we everything, we can see if we are correct or we are not correct. You understand? Any question? Any question, friends? Hello? Any question, please?
Okay,
Yeah.
sir.
Okay.
I want to ask for the lease item that we deleted.
Yeah.
In a case where we have it, we have to compute for it, right?
What?
Do we compute? Do we forecast for it?
Okay. So okay. So for lease, right? So for lease, in reality, right? Or if you are building let's say equity research, right? You don't really need them lease like that. Do you understand? So what you need majorly, it is your PPE. Do you get it now? Yes, your PPE. But let's say you want to do M&A, here, so you can look into lease. But this our model, do you understand? Don't need them lease or intangible asset, right? So if you do it this way, come on, you are good to go. So lease is not what you need like that. Okay, so I don't know if I.
Okay,
so
sir.
I don't know if I. What do you say? What's next?
No, I said all right, sir. Yeah.
All right. So somebody's talking the other time too. Kenneth. Hello, Kenneth. Okay. Anybody else?
Hey, hello.
Yeah.
Maybe because I'm a new in the system, that's why I'm very totally confused. You understand? Maybe you promised that you send the video across later.
Yeah, sure.
So, Mr. Michael.
Yes, please.
So the part you did reconcile to, I want to believe that you're comparing the total asset and the total equity and liability together, right?
Yes. So what is not missing now? What is missing is this figure. This is what is missing. Gone through FMP. You guys are not taught, right? Exercise 2. This is what is missing. Here, for us. So like that, two ways to check. So number one, the first way is exercise 2, while the next one is true or false. Now, this true or false just tell you true or false, but tell you what exactly is missing. I'm saying that this one is saying that 4 billion. Do you understand? So even though you are what an accountant, you know, in your day-to-day work, it also by yes, to know how much you know, yes, as an accountant, no, okay, so how much you know, you're looking for. Otherwise, that can for you if you don't understand the simple narrow. I don't know if you get that right.
Hello.
Eh?
Yes, I do. Another thing is the model we're building. You said if we cannot consider other lines because it's not M&A or the likes. The purpose, what will now be the purpose of this model we are building? What can we use it for?
Equity research.
What is equity research? So what
Yes.
decisions can we use it
Buy
to
or sell.
buy or sell? Okay, as if you are buying, want to buy shares, want to invest in
Yes.
something.
Yes.
Okay.
So apart from buy or sell, right? You can also use that to also determine the worth of the company as well, because that's when your valuation will not come to play. You can use that as well to also determine how much is the worth of the company. Do you understand?
Okay, I do. So without
Yeah.
building valuation now, we can still advise whether to buy a shares or not after building the.
No, without the valuation, right? Valuation, no, you can't, except that you want to do want to do you want to look at the PE ratio, you know, you want to do
Profit earning ratio.
relative, you know, or comparables, right? So then you can say, okay, to buy or to sell depending on your result, you know, of the PE ratio, or okay. No, I won't forget. Or yes, of the PE ratio, of the price to book, you know, all of that.
Okay.
I have.
You know when you did the earnings per share last week,
Yeah.
you know, when we forecasted if the next 5 years, you calculate the earnings per share per year, and from that we could see that okay, it increased relatively year on year. So based on that, can't you advise somebody who since okay,
Okay. So
is it
that one, right? So that one is not enough for my brother.
okay? So you must do valuation for you to be sure.
Yeah, I'm coming. I'm looking for something.
Okay.
Read this one. Valuation. You can see this thing, right?
Yes.
Right? You can see this thing.
Yes.
You can see it, right?
Yes, I can.
So this one is like a comparison, you know. You can see fundamental that you need. You need what?
Yes.
Net income margin, you need ROG, you need ROA, you need EPS, any per share. Right?
Okay.
You need what P, you need CP, you need TP, UPP, you need what? You need year high, year low. Then we have rating. You know? So these are not theory.
I understand.
These are what we do on daily basis to give investors what recommendation.
Okay.
Do you understand?
Yes,
so,
I do.
However, this once again we also do as well in our School of Finance, you know.
Oh, that is going to be
yes.
okay.
What do you say?
I was about to ask if this would be captured in the School of Finance.
Yes,
so.
of course. Now that's why you pay your money. You know, you can see all the companies, so can now make decision. Okay, they buy. So we also teach you again about BCF as well. BCF as well.
Yes.
Let me show something here. Do I have the file on this my Excel? Download coming. Dangote sugar coverage. Okay. Now I can see forecast. You can see the name of the analyst, right? You can see my name there, right?
Yes.
Right?
Mm-hmm.
You can see it here. Now, this is now a full-fledged model. You can see that here I captured what? I captured macroeconomics here. You can see GDP, you can see interest rate, you can see LIBOR, can see USD, to what? NGN. Right?
Okay.
Okay. So this is my my work valuation, right? As that when I did this model, the price of Dangote sugar, this is MDCF. The price of Dangote sugar was how much? Okay, so this model was done at March 10. So the share price was how much? 19 naira. So so for the next 5 years, the share price will get to how much? 61 naira.
61. Yes.
And I said like this thing shows what buy.
Yes.
So now, if now go to your NGX, right? Let's now go and see the price of sugar as at Friday. NGX. So whatever is what is real. Oh my. So now trading statistics and come down and type Dangote sugar. Now the price at what? Friday was how much?
It's
35 naira.
35 naira.
Yeah.
Okay.
Now imagine that you bought Dangote sugar. When I say buy, when? March 10. I say go and buy it, right? So between March 10 this year to what? To what's it called now?
August.
August what?
That's 18.
So you have gained how much? 83 what percent?
3%.
So do you see how people what make money through what valuation? So you have to capture many things. You have to look into macroeconomics. Like I said that if you're building a model, a modeler, you understand macroeconomics, you understand finance, you understand accounting, you understand business as well. Do you understand? So that is why I said that an accountant is not the same as as a financial analyst or modeler. No, both of you are not the same. Because what do you say?
I said, of course, they are not the same.
So you now see why both of you now are what now? Not the same now. So you understand so many things. You understand the global economics. So if anything today happens today, in the world, what will now happens to the fate of Dangote sugar in Nigeria? So here is what my revenue schedule. Here, so I break it down. I look into what capacity. I in fact I look into the volume of production, price. Break it down everything. Do a serious work here. And also, I have my scenario here as well. So when I come to my balance, now to my my IS now income statement, and I change this scenario. That okay, so capacity. If on a worst case, what will happen to this Dangote sugar? You can see that it has changed. So on a best case, what will happen? Again, that's what change again. Now this thing, if this one is worst case now, go and check the valuation. What happens to the buy? Is it a buy or a sell? It's still a buy. You can buy though, but how much now? 49 what? 49 naira. Do you see it? Go back again to your income statement again and change the word to base case. Go and check again your valuation. What will happen? 61 naira. Now go back again to your here again and change the word to best case. What will happen? 72 naira. I don't know if you get what I'm doing.
It's making sense.
Right. So that is how. So this thing is deep than. So that's why valuation is kind of different. So valuation can make you money, can also ruin your life. All right. So you can see why I have to capture the macroeconomics, right? All of that.
The
So,
LIBOR is what?
how to say?
The microeconomics, the
LIBOR.
LIBOR.
So
Yeah.
LIBOR is more or less like interest as well, So so this is why we should not miss our school of finance. I don't know if you have seen the reason. All this one
Of course,
in your
so many
FMVA,
reasons.
were you taught?
Not at all.
Yeah.
Not at all. Not at all.
Aha. So you see why you should not miss our school of finance now. So this is what we are going to use. So all these things here, you can't learn them here, and you get a job, and you should not be able to perform. Never, never, never. In fact, never, never. You can't get a job and you should not be able to perform. So when I was a copper, I've learned modeling before, and valuation. So in my company, I was the only core member, only copper who was in research. I was the only copper who was in research. So every other copper, we are in customer care, we're in another department, boys and guys and ladies. And I earn more money, right? So skills is so fundamental, so Jamil. You understand? So that's why I have to encourage you guys, see that you learn this thing. This thing can fetch you money. Like I said the other day, that this thing, I built this thing in 3 days for a client who want to raise how much? 100 million. And how much do I charge? 2 million naira. 3 days. Why all of you were in the sun voting for your president? I was making what? My own money. Right? Aha. So you see why you should not miss our school of finance. Well, like I said, that's that anyway, that's that too. So our school of finance or my personal class on mentorship, don't miss it too. You understand? Don't at all miss it. Don't joke with it in any way. So that question. Hello, do you have any question? Any question, please? Any question? Any question? Any question? Any question? Hello, any question?
Hello, can you hear me, sir?
I can hear you. Yeah, Kenneth.
Can you hear me, sir?
Yes, yes.
Please,
Yes,
the class of finance, when are you starting? Which day are you starting? The starting class of it. The class of finance. When are you? When are they starting the class?
September.
The finance.
September.
When? Beginning or end? Or no particular dates?
Ending. Yes.
So
hello.
How much is it?
50K.
Requirement for it.
Yeah, this is it here. This is the flyer here, So you can see the flyer, right? So it's 80K for early bird, but because of my brother has helped some people, 20 people, has helped them. So it's not 50K now, for the first 20 people, right? So first 20 people, right, you all will now be paying 50K. But right now we are about 12 now. So just remaining 8 people. So once 8 people are paid, right? So then let's now go back to what? Now go back to 160K. So that's it anyway. So
for the mentorship class, when would that start? I think I asked you.
September 100K.
What time, please?
What is it? Ending as well.
The mentorship ending as well. September.
Yes. So
the class is physical or online?
Online, bro. Online. Anything again? So if you want to put in for it, just send me a DM, yes, send me a DM, want to put in for our school of finance, Send me a DM. So any question? Any question before we call it a day? So for this one, right, we are done with this one. Okay. Yes, we are done with this one. So maybe class will go tomorrow. I will let us know. You understand? All right. So anything again?